Good afternoon, everybody. Welcome to our webinar on R&D tax credits, a deep dive into R&D tax credits. My name's Stuart Rogers. I'm a corporate tax partner at Francis Clark. I've been with the firm for well over a decade, and amongst a number of things that I spend my time focused on, R&D is one of them. We did a session about a year ago, pretty much to the day, in fact, on R&D. Quite a lot to talk about 12 months ago, and probably even more to pick up and discuss and think about 12 months on from then. So we've got quite a packed agenda in terms of things to talk about, and we'll pick those things up in a second. But I'm joined by two colleagues, Dave Wase and Rob Waterhouse, and I think it'd be good. This session is just really me having a chat with some people that I work with on a day-to-day basis from an R&D perspective, and seeing if we can draw out all the key themes that we think people will be interested in. So without further ado, I'd like I'll let them to introduce themselves. But Dave, perhaps you'd like to go first. Introduce yourself, who you are, what you do, what your specialisms are.
Oh, hi. Yeah, my name is Dave Wase. I head up Francis Clark's tax investigations dispute resolution offering. I come from a background of working within HMRC for nearly best part of 30 years, working tax inquiries from all sort of aspects, right up to tax avoidance schemes before I left. And yeah, just using that experience to help Francis Clark clients with HMRC issues.
And Rob, would you like to introduce yourself?
Sure. Hi everyone, I'm Rob Waterhouse, manager here in the corporate tax team, focusing on R&D tax relief. Prior to joining Francis Clark, I worked at a specialist R&D tax credit consultancy for just over 5 years. So my prime focus at Francis Clark is working with clients to prepare their own R&D claims, but also working with them if they require assistance on inquiries regarding their R&D claims with HMRC.
Fantastic, thanks both. So in terms of what we're going to try and cover in the hour, and we might run over a little bit, we'll see how we get on. We're going to do some scene setting. So I think if you are interested in R&D, you're probably up to speed with most of this, but we're just going to sort of cover recent history really, and explain kind of what the history of R&D has been, because that's quite relevant in many ways. We're going to talk about HMRC's approach to volume compliance, which again, if you're interested in R&D, you'll know what that is. But if you've not come across it, we'll explain that briefly. And then we'll start looking at some of the changes that have recently been made to the R&D scheme as a whole, and what those kind of mean. And then we're going to pick up everything that we've talked about and consider how to better approach future claim processes. And as we go along, there's a question function on the platform here. So if you've got questions, by all means type those in and submit them. They'll pop up on our screens at our end. And if it's a pretty reasonable juncture to deal with them as we move along, we'll try and do that. Or if not, we'll pick the questions up at the end and try and deal with them all together in the sort of last 5-10 minutes that we've got. So that's the basic agenda. So in terms of scene setting, a bit of a history lesson. I said recent history, but it's probably the last 20 years in reality. So R&D is a UK tax incentive, commenced in around the year 2000. I think the UK followed a number of other jurisdictions in terms of introducing an R&D incentive. And in the early days, we had a pretty good relationship with HMRC. They were learning how the scheme worked at the same time that we tax professionals and taxpayers were learning about it, and there was quite an open, progressive relationship between HMRC, taxpayers and advisors, and that was really positive. The other key feature about the scheme at that point in time, at least, was there was a PAYE cap and a minimum expenditure threshold, and that really meant that you didn't get too many small R&D claims. They were a bit more chunky and had a bit more substance to them, because you had those measures in place, which meant that small claims weren't economically viable. But those things were later removed, and I'll come back to that. But effectively, I had HMRC really encouraging people to make R&D claims. There were brochures. I wouldn't quite call them sales brochures, but there was certainly campaigns from HMRC's perspective to raise awareness of R&D. And the availability of the credit, and all of that permeated through probably the first 10 years of the scheme. Cornerstone of the scheme was something called what I call it, the 30-day check and the 30-day check and inquire or process window. So basically, what that meant was you filed your R&D claim, and if it generated a refund or tax repayment, HMRC had 30 days to either check that and then process the refund or open an inquiry. And what that was designed to do was give you, the taxpayer, some certainty around whether or not your refund was was finite, it was full and final. HMRC always had the ability technically to go back or open inquiries in the normal inquiry window, which is typically 12 months after the tax return has been filed. But the 30-day check and inquire or process window was designed to really add additional comfort to taxpayers, so that once they got their refund, they were relatively comfortable that they could go and spend it. And that was a major commitment HMRC made. And some of this is guesswork, to be honest, but from probably about 2013-14 onwards, which probably tallies in with government of the day, which would have been Conservatives and the Lib Dems, and then later on just the Conservatives. But there was there was a reduction in HMRC headcount, diminishing HMRC resources available to spend on R&D claims relative to the overall claim numbers, which were going up. So at the time when R&D claims in terms of numbers were going up, the resources available to HMRC to police the system were going down, which is a bit of a dangerous combination. And then after 2016, HMRC actually disbanded the specialist units that they'd formed, and they built capability, and they built knowledge, and they built experience, and a lot of that was disbanded from around 2016. And no coincidence really in my mind that from that point on, if not slightly earlier, HMRC inquiries into R&D were pretty rare. If we kind of get up to about 2017, 2018, certainly I attended several meetings at the Treasury along with a number of other people, where the representative bodies, the ICAW, the Institute of Chartered Accountants for England and Wales, and the Chartered Institute of Taxation, in those meetings were openly warning the Treasury and HMRC that because there was a lack of HMRC compliance activity in the R&D space, that there were a number of actors in the industry who weren't adhering to sufficiently high standards in the representative body's view. And those things were openly discussed in meetings, and HMRC and the Treasury should have been aware of those things. I think meeting minutes will demonstrate that. By the time you get to 2020, and just essentially pre-COVID, like a month or two before, the National Audit Office actually refused to sign off HMRC's accounts because they think there's a significant and material amount of R&D tax credits that have been paid out to taxpayers which shouldn't have been. And that really is the moment that I think people started to realise that the way in which HMRC had approached R&D compliance, certainly since 2016 and probably going back to 2012, 13 actually wasn't fit for purpose anymore and needed a major change. But at that point, nobody really understood what was going to happen next. So we come to volume compliance. So the question then is, well, what did HMRC do? Well, Dave, you and I have been in the thick of this for 18 months. What is ISBC for a start, and what's volume compliance?
Yeah, ISBC are individuals and small business compliance.
Within
R&D,
HMRC. Within HMRC.
HMRC, yeah, they're an inquiry unit, but within that they have set up a volume compliance team. You wouldn't ordinarily associate ISBC with company or complex company inquiries, and what the volume compliance team appear to be doing is running sort of complex inquiries by rote, as it were. Yeah, again, late sort of 22, early 23, they set up a sort of task force team of relatively new staff. I think a lot of them were brand new, receiving very little by way of training from our experience, and we've been told roughly between 6 and 10 weeks of training, depending on what sort of inquiries they're going to be running within the R&D cases. Experience has shown they've got very little prior R&D knowledge, very little, if any, CT experience for corporation tax. Recently, we did have an instance where the officer didn't know how to, or failed in issuing their closure notice correctly, ignored the tax comp. So when we pointed this out to them, that they hadn't adjusted the profits for tax purposes, i.e., capital allowances, all the usual things, the response we've had is, can you show, you show me what you're expecting to see, which is quite incredible. But that's kind of what you're dealing with as regards experience. So the Public Accounts Committee report confirmed basically HMRC had opened inquiries into around 20%, circa 90,000 R&D claims that were submitted annually, and previously those sort of figures were less than 1% of R&D claims. So you can see where the ramping up comes from. From a personal point of view, prior to sort of October-ish, I guess, November 22, I'd not really seen an R&D inquiry in my time being here in Francis Clark. I've been here about 4 years then, and yeah, at one point, pretty much my entire working day was taken up with R&D inquiries for some time. But yeah, moving on.
So should we just talk about volume compliance? I mean, we're coming to it here, but and we'll come to it. But it's basically junior caseworkers being given a script or a methodology to follow, without necessarily having any great deal of experience or training in terms of what they're doing, and really just following a process that somebody else has written.
Yes.
And trying to deal with literally thousands of R&D inquiries in that way, which is problematic, and we're going to look at some of the problems that we've faced. So let's pick up some of these things on this slide and talk about some of the problems that we've seen with that.
Yeah. This is where it all gets slightly ironic at times, that one of the chief challenges we face every time is as regards to the status of the competent professional, and when you're dealing with people that for the most part don't appear to display a great deal of competence in what they're dealing with, yeah, the irony is quite stark. We also find they're predisposed to rejecting the claim rather than actually inquiring into the claim. They want to reject the claim 100%, And the evidence we have to that effect is the volume of cases we have, i.e. the percentage of those that we have, where there's just no evidence of any consideration of partially allowing a claim. It's reject 100% and move forward. So yeah, but as regards when they originally opened the inquiry, we find that they've completely ignored whatever's with that return or with that claim. Whatever supporting evidence you might have presented, the best way of working matters, taking matters forward, is simply almost presenting it again, which is time consuming, but making reference to whatever's been submitted doesn't appear to land very well with them. They don't want to look at what's already in the return because they've ignored it already. So we're having to show them it all again. And yeah, one of the other challenges we receive is where the officers often assert that the advance is just the company's own knowledge, not moving beyond the wider industry baseline. The officers don't seem to fully appreciate or understand that whilst something might be being achieved with one of the company's competitors in the marketplace, that competitor is not going to share that knowledge across the industry. So how else is the client going to acquire that knowledge other than really effectively conducting their own R&D? But that again does not appear to land with these officers. Another challenge we have is pushing back on their conclusions, which are often based on Google, and obviously due to the HMRC inquiry process, you're looking back 2 years, 3 years at times, and knowledge base, everything moves on in that period of time, and depending on what the client's client is actually producing or what market they're working within, they're often fast moving. So what is on Google today does not reflect what was around 3 years ago. But again, there's a lack of appreciation. And yeah, we've certainly found ignoring patents, IPs, whatever, you know, it just doesn't land with them.
Yeah, that's a particular sort of bugbear of mine, and just to explain that one, I think it gets to the heart of what's going on here. You know, we talked about HMRC ignoring information that's provided, and obviously developing a narrative which we think suits their own, you know, their own objective, which appears to be to reject claims, certainly more often than not, but in the vast, you know, in the vast number of cases, not just the majority, but the vast number. But with patents, it's quite interesting because we have a number of letters, and we've seen a number of letters from other advisors where there is a standard paragraph that's gone into an ISBC inquiry letter, which says our research indicates that you've not sought to protect your intellectual property with a patent, and therefore our view is that indicates that you've not undertaken genuine R&D. Now, anybody who knows anything to any degree about intellectual property and patent law knows that patents are not obligatory, they're optional, and there's a whole raft of reasons why you wouldn't automatically rush to patent a piece of intellectual property or process or an invention. But on the other hand, we have a number of clients who have made that decision to patent a particular invention, or as we have with a couple of clients, you know, they're serial and habitual patent applicants, successfully so, and they've got real track record. And when you look at the process behind getting a patent, you understand whilst it's not, you know, the words aren't exactly the same as the R&D definition, there is some overlap. And yet when you submit your R&D claim with 3, 4, 5 patents in support of the claim, and as evidence of what you've done, you still get back the same sort of 12 standard questions, which is, you need to explain to us what you've done, why you did it, how you did it, why it was innovative, etc. there's no reference to the patent documentation that's been submitted with the claim. And when you get into the inquiry and you point all these things out to HMRC and say, you really need to read the patent documentation because that's some of the critical evidence here. What you then get back is a reply saying it's not R&D, but in that letter there is no analysis or attempt to analyse the relevance of the patent application, and there's no attempt to justify why the patent is not relevant evidence. It is just fully ignored. So that gets to the heart of what's going on with the volume compliance team. And my suspicion is that the volume compliance team at HMRC aren't sufficiently well trained in patent or intellectual property law to get into that level of detail. But someone in their wisdom decided that it was an opportunity to sort of cite a lack of a patent as a weakness in a claim, and it just demonstrates they're not actually trained sufficiently well to really prosecute these inquiries in a way which is fair to the taxpayer, and we'll probably come on to that on another slide. But the patents really get to the heart of it, and it's interesting because the ICAEW and now the Chartered Institute of Taxation are really interested in both examples where HMRC are ignoring the existence of patents without commenting on it, and secondly, situations where taxpayers have submitted quite a lot of information initially with an R&D with their corporate tax return, or later in an inquiry, and HMRC just persistently ignore some crucial information that's gone in with that and stick to their own kind of scripted narrative. So evidence is being called for by the rep bodies, and we're working closely with them, and we'll touch on that later. But yeah, it's hard going, Dave, isn't it? Because you just feel like you're saying the same things over and over again.
We get there eventually.
Yeah. Should we move on to the next? Should we move on to the next slide? So one issue that's come up quite a lot, and it's become quite interesting, is quite early on in an inquiry process, and one may say sufficiently early is to suggest that HMRC have already formed their view of whether or not your claim is qualifying for RD or not, and prematurely reaching that view. But these questions come up quite early in an inquiry process, and there's a number of questions, and in a minute it'd be great if you could take us through those. But I think some of this comes from a place, well, we understand where this comes from within HMRC, I think, and maybe if you run through some of those questions, and we can talk to where these questions come from and why they're important and why they're slightly different from what you might have expected to see a few years ago. So if you could talk us through the questions that we see, Dave, and we can pick up some of those themes, I think.
Yeah, sure. I mean, as Stuart said, there's a feeling that there's a rush towards the what you call the penalty culpability questions. So, i.e., should HMRC apply a penalty or not? What were the behaviours of the directors in making the claim in the first place? And we quite often get to that point as soon as HMRC have decided there's no R&D in this claim, and they'll quite often reach that point almost immediately, it seems. So you're immediately into these culpability questions, and we tried to push back on them in previous cases and find that just creates more aggravation and grief. So we go with with giving them their answers as regards the culpability questions, but they're kind of focused on trying to put forward that someone's been in some way careless in making a claim for R&D. So first of all, they focus on the directors themselves, because the directors are the guys that effectively sign off the return or sign off the claim. So they want to know if they read all the guidance, were they aware of the DSIC guidelines before they made the claim, and if that's the case, did they read the HMRC guidance? There's a slight tinge of irony in this side of it too, because we've noticed that the volume compliance team just completely ignore the previous guidance that was there for officers undertaking claims. as these voluntary compliance team, generally you can't get a phone call, let alone a meeting with them. They'll only run the inquiry through letters. At a push, they'll do an email. But yeah, they don't seem to be paying any attention to their own guidance, but they expect the directors to have read all the guidelines and all the BEIS guidance and be aware of HMRC guidance in the course of making their claim. But generally, cases we deal with, the directors have sought professional advice. That's important. We'll come on to HH scaffolding case in a minute, but it's important that people haven't sort of gone out on their own and submitted a claim. If they have, then we need to ensure that they were aware of the guidance at the time, etc. But where they're taking professional advice and those professionals are registered and suitably qualified, then should provide a reasonable cover as regards the potential imposition of any penalties. And again, HMRC will explore whether they're considered appropriate advisors, whether they've got the relevant qualifications, experience, etc., to be advising on R&D. And finally, the HMRC tend to get wrapped up on, did the directors approve the R&D claim before it was made? Well, the short answer is yes. In many cases, you're rarely going to come across an instance where the directors haven't approved the R&D claim, but sure, it must happen, otherwise they wouldn't ask it. But
I'll pick up on that in a minute.
Stuart will pick up on that. Yeah.
But
yeah, the HH scaffolding case, which is fairly recent, it is an important case because HMRC were effectively running down the penalties sort of track very early on in that case as well. Input careless penalties without really demonstrating there was any carelessness. And then when they got before the tribunal judge, guess what? The tribunal judge didn't feel there was any carelessness there either. So this failure to sort of properly follow process and procedure came back to bite them, which we kind of thought it would at some point. We're just glad we weren't the ones there having to go through that process, which must have been very costly. But yes, sorry, Stuart.
So H&H, yeah, I mean H&H is interesting because it wasn't a great, on the face of it at least, it wasn't obvious R&D claim because they were scaffolders. We don't know an awful lot about the kind of the quality, if you like, of the underlying R&D claim, but what the court found was that the directors of the company thought that they were engaging a very reputable firm of R&D advisors and went through a process with them. And in the minds of the directors, they took care because they appointed someone that they felt was a specialist. Now, whatever happened to the R&D claim happened to the R&D claim. I suspect from what we can read in the case notes that the claim was withdrawn effectively, and what HMRC then tried to do was hit the company with a penalty for being careless. But the judge basically said, well, that okay, the claim was withdrawn, but the company went through a proper process of engaging advisors who purported to be specialists, and the directors sort of did a reasonable amount of diligence on that, and came up with a reasonable way of doing this. And whilst they've ultimately agreed that the claim was incorrect, they weren't careless in how they approached it. So who knows how HMRC are going to respond to this, but they were, as you said, Dave, they were running this argument quite routinely, and we were pushing back, and they were with some comments that the Chartered Institute of Tax had made as well last year, in July last year. HMRC were backing off of, were having a bit of a fight, but in general were backing off of penalties. And then H&H has come along and probably made them think a bit harder about applying careless penalties. But it's clearly relevant. I think the reason why we're getting all these questions, and you sort of may think, and I've had it put to me before, that I engage Francis Clark to do my R&D claim. Why do I why do I need to read all this homework that you're giving me, Stuart? Surely you do all of this. And the answer is yes, we do all of that, and we are, we're subcontracted by the company to do the R&D claim, but it doesn't absolve the directors of responsibility to make sure that Francis Clark are doing a reasonable job. And ultimately, it's, yes, we're advising, but the decision to make the R&D claim rests with the directors, not with Francis Clark or any other R&D provider. And HMRC want to understand, want to feel reassured that the directors, somebody who's nominated, we'll come on to that in a bit, but somebody who's close to the R&D projects has actually read the R&D guidelines and taken that advice and come to a conclusion which gets you to a solid place as per H&H contract scaffolding. Now, the reason why HMRC might be a little bit touchy about this is because there's a pattern, there's quite a lot of evidence that a number of R&D providers would take information from the company directors, quite limited information, maybe their accounts and a half an hour phone call. They'd produce an R&D claim, which the client would never see. And then they'd submit that R&D claim without it effectively being approved by the director. And we have seen cases where HMRC have then opened an inquiry into that R&D claim. The company have asked the R&D provider for assistance in dealing with the R&D inquiry. The R&D provider has disappeared, and then the director is left to deal with HMRC on their own, but they have no idea what was submitted in their name. And when you're coming back to the concept of carelessness, HMRC view pretty clearly is going to be, if you didn't see what was submitted in your name, if you didn't check it, if you didn't read it, if you didn't know what it was, you're probably going to have been careless because you've let a third party do something without you checking it. And of course, that third party was likely paid on a contingent fee basis. So there's all sorts of issues there, but fundamentally, you've got to understand that HMRC want to make sure that when a company files an R&D claim, it's gone through a sensible, if you like, governance process and quality process, and it just hasn't engaged somebody who's not following any of those things and is submitting something which has got no real credibility or real substance to it. So that's really what it's getting at, and that's permeating through the whole R&D process, and we'll come back to that in a minute. We've made the slide on, but one of the other things about more recent ISBC letters, Dave, is the amount of information they're asking for. So just be worth sort of running through the kinds of things that HMRC are asking for to validate an R&D claim, and then again maybe I'll come in at the end and just talk about why I think we're getting all of these questions. But if you take us through the list, and let's talk about it.
Yeah. I mean, they're getting quite. They're going into some of these claims with quite some depth now. We're finding with certain clients, and they've in some ways we're finding that the admin burden for the client is quite huge compared sometimes to a fairly modest claim, which sort of pushes clients forward to a decision over whether to carry on defending the claim or withdraw it and just try and withdraw from the battle, as it were, because the cost is proving too great. So yeah, we are finding that they're now moving into asking for the timesheets and the pay-as-you-earn records, just to sort of get a better handle on how the claim's been put together, who's part of that claim, looking through the employment contracts and any subcontractor contracts, invoices, etc. But they're more sort of moving to a more forensic approach in some cases, which is, like I say, eating up far more time. And I think it's fair to say that it's pushing the inquiry on, considering that quite often the inquiry will ask for a lot of what's already on the return or on the claim as it's gone in. So there's
Yeah,
this repetition, and then we get further into the claim itself.
yeah. I think what's interesting here is this list of things here broadly comes from 2 sections of the revenue manuals about how to operate an R&D inquiry, and those 2 sections effectively say you do not have to ask for all of these things you wouldn't ordinarily ask for all these things in an inquiry, but from time to time, depending on the way in which the inquiry that you're looking at is progressing, you may choose to ask for some of these. And fundamentally, it's what we're actually seeing is more often than not, HMRC are asking for these things. So it's not by exception they're asking for them, which is what the manuals really is saying. It's as a matter of routine they're asking for all this stuff. And some of this seems to come from a place which is HMRC say that about two years ago they identified a large scale fraud on the R&D system perpetrated by organised crime, with a number of bogus R&D claims where there was a company set up and an R&D report written and submitted, but actually no underlying economic activity, let alone R&D activity. And so HMRC seemed to be, slightly affected by that experience. I mean, understandably so, perhaps. But they actually want to see evidence. So just the fact that you've written an R&D report and said something happened, they don't seem to take that as evidence that it did. They actually want to go sort of into the layer below, which is your R&D report says this, but can you prove it? Have you got things which indicate that R&D happened, such as a planning document, not something that you wrote for the purposes of the R&D claim, but a real document that was commercially needed at the time? What about test results? What about research that you did into what else was available in the sector, in the industry, to solve the problem that you face? What research did you do? Where did you collect that research? Can we see it? So it's quite interesting. I mean, it is much a much deeper and a more invasive approach to inquiry, but than we've seen before. And there basically is a lack of trust, I think, between HMRC and HMRC is demonstrating a lack of trust. They want actual evidence. Conscious of time, Dave, let's move on to the next slide. And I think we might go past the hour, but hopefully we'll only by five minutes or so, and people will be patient with us. You get to the end of the inquiry process, Dave. HMRC are standing their ground, and we're standing ours. What are the options that we've got?
Well, when HMRC have issued their sort of view of the matter, as it were, as they call it, ahead of issuing their closure notice and closing the inquiry down, and like we say, usually where we've hit an impasse, if we have hit an impasse, it's usually along the lines of HMRC want to reject the entire claim and allow nothing at all. So they'll issue their view of the matter. This will give us basically 30 days to take up an offer of a statutory review if we don't accept HMRC's view. So we would take up the offer of a statutory review or independent review. That would be undertaken by solicitors and legal services. They would give generally 45 days for them to do their review. That's their review period. But the legislation or the guidance allows them to agree a reasonable period. But what we're finding is, you're kind of stuck in a situation where you can't do much about that review period when it comes back and they say they need more time, because if you reject, then you're kind of agreeing to settle on the terms that HMRC have put forward, which are totally unacceptable. So you need that review to go through. One of our latest ones, I think, was 18 weeks out from 45 days. So we're going sort of past November to wait for that review to come back. Other than statutory review and seeing if HMRC uphold their decision or whether they'll move. And if we can input some additional detail for the review officer to consider, that can always help. But if HMRC aren't budging, we can go for a thing called ADR, alternative dispute resolution. That's a mediation sort of day, effectively. Would be a meeting of sort of a few hours, probably 4 hours, with HMRC officers concerned, maybe even have a policy individual in that meeting as well. That would be, like I say, it's kind of a time burden as well for everybody concerned, roughly about a day of your time spent on the ADR. But obviously it's a cheaper option than the final option, which is first tier tribunal, which can be quite costly. That's a chance, but it does present the opportunity to argue a case with an independent arbiter in the form of a tribunal judge. And like I say, with HH scaffolding, that worked as regards the penalty, because quite simply HMRC hadn't demonstrated any carelessness. They just assumed that because the R&D claim related to a scaffolding firm, there could not be any R&D, and so to put a claim forward was carelessness by default. But yeah, the judge brought them up on that. And similarly, I feel that where we've had instances where HMRC are with not accepting the claim 100%, when there's quite plainly R&D present, then I feel a tribunal judge would rule in our favour in that situation. I feel it's unlikely that they would agree with HMRC's standpoint, where in some respects it is frankly just not credible. But yeah, other options we've got on the next slide. We've had some success in the past with complaints in this regard.
Yeah, we've just to pick on that. We've made a complaint, and the process was changed, wasn't it, Dave? And we ended it took 6 months, but eventually we got a positive outcome. Yeah, for a very positive outcome for a client by making a complaint. But that took time and lots of energy.
Yeah, that's the one thing with complaints is you quite often. Well, what we did find was the inquiry got escalated. We had inquiry officers from WMBC, which is the larger unit where you'd expect with handling this type of inquiry. So we had a bit of what we'd say common sense descend, and yeah, with that one, the claim was allowed in full. But we've also gone through the complaints process and had the inquiry, what they call escalated, where we've actually had meetings with the individuals concerned and had phone conversations, etc. as well. So that's certainly helped the situation and moved the inquiry forward. But yeah, I know Stuart's been liaising quite heavily with CIOT and ICAW, and they're both bodies that are in constant dialogue, it seems, with HMRC. So it's important that they need an evidence base to move forward with. So it's important that people do feedback to their respective bodies, and then they can do what they can to ensure that HMRC basically up their game, I would say, is what we're looking for them to do. We can see from past experience within the R&D market that things were going wrong in certain elements and they needed to be challenged. But what's happening currently is just not really working. It seems to be focused on the wrong people most of the time. And we'd certainly call into question the stats, and we have called into question the stats that have come out from HMRC on this, as run part of their mandatory random inquiry program, where we'd question the random element to that, but also the general attitude from the officers concerned is to reject a claim rather than actually inquire into it, it seems.
Yeah.
But yeah.
Okay, Dave, shall we try and pivot now? I think I've got some questions. Should we just deal with those now? So because I think we can deal with them relatively quickly. So I'll deal with the first one. So somebody's asked, you mentioned that HMRC used Google as a means of establishing the baseline for an R&D claim. Do we think that might get worse as artificial intelligence becomes more prevalent? I think there's a risk of that. Yes, I mean AI presents all sorts of challenges to the way in which both tax advice is delivered, but also the way in which HMRC use it and seek to use it from a caseworker perspective. I think what we're getting to is caseworkers just being quite lazy, looking on Google, seeing if there's something similar to the product which a claimant company has developed, and then basically says, well, XYZ Limited in Nottingham has done something similar to you. It can't be R&D because somebody else has basically done it. And that I mean, that's the level of sophistication that you're kind of dealing with. So next question, did the scaffolders only avoid the penalty at tribunal, or did they still win the claim? Well, I think I tried to explain this, probably didn't do a great job. I suspect they withdrew the claim, they accepted that the claim wasn't valid, and then HMRC attempted to apply a penalty. So the tribunal was just about the penalty, not about the actual claim. Are we responsible for the cost of tribunal on ADR if it's unsuccessful? Dave, that's one for you.
Yeah, the client would be funding the tribunal costs and the ADR costs, but as regards the HMRC's costs, no, you wouldn't be. The only way you get sort of pulled into that is if the tribunal was designated complex rather than a standard tribunal listing. So if it's designated complex, then you'd have to have a discussion with, if you're having a barrister represent you, then what options you'd want to proceed with as regards costs. But I'd imagine you'd be opting out of the cost regime, so that if you did lose, you weren't picking up HMRC's costs too. But
I think it's fair to say, if you're getting to that kind of question, you're looking at a material amount of tax, you're looking at a material amount of professional fees, and you're probably beyond the first tier tribunal, possibly going to upper tier and Court of Appeal and Supreme Court, and hopefully for unless you've got a really significant amount of tax, that's not a place where you're going to be likely going.
I think you're more likely going to be designated standard, and you wouldn't be in a position to be paying HMRC's costs, but you would be obviously funding it yourself. And
next question.
At what point do you suggest a complaint is made? Mid inquiry or after the process is complete? You can make a complaint at any time. If you're unhappy, it's an expression of dissatisfaction. So if you're unhappy with what's going on, you're at liberty to make a complaint at any time. It's incredibly frustrating dealing with this unit. There's no two ways about it. There's no soft soaping it. When they're asking repeated questions and ignoring what you've sent into them, it's very frustrating. It's very time consuming. It's wasteful. So when you're in that sort of situation, quite often the best option at that point is to lodge a complaint and to see if the inquiry can get escalated and, for want of a better phrase, dealt with by a grown-up. I think that's really what we're looking to do a lot of the time with some of these inquiries. They're not all the same. It's just certain inquiries, for some reason, we just don't seem to get anywhere with the officers concerned. So the option we have is really to get it moved out of that team.
So one of the challenges, Dave, and we've got to move on because we're a bit behind. But I think one thing about volume compliance that we probably not really mentioned, but I think most people familiar will know, is that volume compliance is a bit different to the traditional way in which HMRC would operate an inquiry. So with a traditional approach, you'd have a named inspector who you were writing to, who'd opened your file, who'd opened the inquiry, who would, you'd be writing to that same person even if there were 5 rounds of correspondence, it would be that person who picked up the file. With volume compliance, it's who is available. So you might be dealing with 5 different people over 5 rounds of correspondence, each of whom has to pick up the file and start from scratch each time. And that, again, people will not need a degree in anything complicated to work out. That's not a great approach if you're the taxpayer or the customer sat the other side of it. It just is hugely frustrating and infuriating. But that is a big feature of volume compliance, is no named caseworker, which is just ridiculous. Should we move on to the next slide and be a bit more forward facing? So I think, you know, what you've, if you're new to R&D, what you probably would have picked up from the first sort of 45 minutes of this session is been lots of challenges with the first 20 years of the regime. Probably not really understood until the last 3 or 4 years. And consequently, what that's meant is HMRC have changed, or have looked at changing the way in which the scheme works. And we're going to, Rob's going to help me go through some of those changes. And there's been a lot of them in the last 2 years, most of which kick in around effectively around now. I'm not going to pretend that I think that HMRC have done a great job of these things. I think there's some real problems with the way in which HMRC have made changes. I think we can understand why they've made some of these changes, but I'm not sure they've executed them in a fantastic way. And I think there's more change to come, because I think, you know, the Labour Party have got lots to deal with, or the Labour government have got lots to deal with, and I'm not really sure whether R&D features tremendously high up the list of priorities. But certainly, if they get to this, I think what they'll decide is that there's some improvements needed to the administration of the scheme, the way in which HMRC police it. So there may be more change, but it's been what feels like, Rob, 3-4 years of consultation, something like that.
It certainly feels like a lot more time of discussions.
Yeah.
So touching on a few of the points which are on the screen there. The notification requirements is a curious one, certainly an area for potential confusion. 2 sort of main areas which HMRC have sort of focused on. Firstly, the additional information form, so launched last year, the sort of new benchmark for the level of detail which is required to support an R&D claim, and then secondly, the pre-notification form, so for applicable to some companies, a form which is required to be submitted to let HMRC know that the company is planning to make an R&D claim. So focusing on the sort of onus that the company's directors have, that there's a responsibility behind making an R&D claim, which they need to acknowledge and action accordingly.
Yeah, and then we got the actual changes to the scheme itself. Lots of chat about simplification and moving from 2 schemes to 1. But, you know, I'm an accountant. My maths is reasonably good. Even I can work out we've actually moved from 2 to 3 back to 2 schemes. So we still have got 2 schemes. Not quite sure where the marketing department was at HM Treasury when they did this, but yeah, there's still 2 schemes. And we've got some changes around overseas expenditure, haven't we? And then the sort of one of the most annoying things, certainly for me, is the subcontractor stuff. So it's 5 to 1. We're behind, but we're just going to press on. And if people need to pop off and go to the next appointment, that's absolutely fine. But we're going to carry on with this. And of course, this just for everybody who's watching, who's got a nip off, the webinar will be recorded, and you'll be able to pick up a link at some point and get back to the bit where you had to dip out. So apologies about running a bit over, but as I said at the beginning, lots to cram in. Rob, let's talk about these notification requirements. Take us through those.
So first of all, it's the additional information form. So as noted on the screen, it's required for all claim submissions which are made to HMRC. So previously, an R&D claim could feature simply an R&D expenditure total and a claim through the company's corporation tax return. But there was a prescribed level of detail which was mandatory. This new form, although it doesn't cover all of the relevant detail that's necessary to sort of outline what thinking has gone into an R&D claim, it does provide that sort of minimum level of detail, both on the financial elements of the claim and also on the projects too. A useful point which is noted on the screen there is the need for a company director or a senior officer at the company to acknowledge that they've sort of approved the R&D claim and that they take responsibility. So back to the culpability points which Dave discussed earlier, it highlights the need for a company's director to stand behind their R&D claim, and there isn't the opportunity to shrug off responsibility and pass it to an advisor.
Although the advisor is, if there's an advisor involved or advisors, they have to be named on that form as well. So HMRC is clearly looking to understand and maybe is building up a picture and some statistics around, who the mischievous advisors are, as much as looking for, that reassurance around director involvement. Good stuff. Should we talk about pre-claim notification, which is different from the additional information form, confusingly?
Well, a point to note here, certainly comes from a similar kind of area from HMRC that they're trying to sort of eliminate or minimise error and fraud within R&D claims, and part of that they deem is ensuring that claimants are making claims and they're aware of the claims they're making. In terms of the applicability, the rules are quite complex, so it's certainly one which does require some careful consideration with regards to the pre-notification window and kind of the actual dates when a claim was last made. But in short, as it details there on the screen, it's a form which is required by either first-time claimants or by claimants which haven't made or haven't submitted an R&D claim in the last 3 years from the end of the pre-notification window. So yeah. It's a compliance activity which should feature within ongoing planning for R&D or for making R&D claims, and certainly one which for unaware companies, namely startups, there is that chance and there is that risk that that the opportunity to make a claim for a given accounting period is lost.
Yeah, I mean, we talk about this quite a lot. We've got lists of clients who've made R&D claims, so we can work our way through. If there's a requirement or change to the R&D process, we can work our way through that list, and we can communicate, correspond with those clients, and tell them what the process changes are. The AIF that we just talked about, and the additional information form that has to go in before the claim can be submitted. We can contact all our R&D clients and tell them that there's a procedural change and what that means for them. This one is different from the AIF. So this is about HMRC are trying to do away with the client or the taxpayer who is told or realizes shortly before the 2-year window, which is the claim window in general terms, after the end of the relevant accounting period, that they just make a very rushed R&D claim at the last minute, just to get their claim in before the window expires. And actually what HMRC are driving people to do is think about whether they've undertaken R&D or not, and put an information return into them within 6 months of the end of the accounting period, so that HMRC have got some advance notice of it and can think about it, and when it comes in, if they don't like it, it gets put for inquiry. I mean, it's just about HMRC gathering more data, but they're really accelerating the timeline. Now, the problem, with this kind of thing is that for us, whilst we might know a few clients that are startups or not made an R&D claim before, who might have a prospective R&D claim to make for the first time, or for the first time in the last 3 years. There will be many companies that we don't know, or prospects, or there's just a big population out there of startups that won't have had the necessary level of advice by the time you get to that 6-month deadline, and they'll lose the opportunity to make a claim for that relevant accounting period, which is it's a bit frustrating, really, isn't it? Because the old deadline would have been 2 years. It still is 2 years, but you've got to do this pre-claim notification first. So it's just a much more complicated procedure, and unless you are already in the world of R&D and you've got an R&D advisor, it's the kind of thing that you can easily miss, Rob, isn't it?
Absolutely.
Yeah. Okay. So I think what we're saying to everybody there is, and possibly here on this webinar, we're preaching to the converted, and everybody who's here and is making an R&D claim has made one in the last 3 years, and that pre-claim notification doesn't apply to you. But if you've got friends and colleagues in other businesses who are thinking about making a claim for the first time, there's more for them to do, and an early engagement with an advisor is important. So, Rob, time was that we had an SME scheme and an RDEC scheme, so a large company scheme. Things are changing though, aren't they?
Yes, so certainly all change when it comes to the regimes and the mechanisms for making a claim. So in the spirit of simplification, two schemes have merged into a single R&D scheme. Largely, the mechanics follow the operation of the previous RDEC scheme. So namely, it's so above the line taxable credit, so recognisable as other income in a company's accounts. But in terms of the generosity, it also follows the level of relief available from the prior RDEC scheme. So for SME claimants, it's a marked sort of decrease in the generosity available, as on the screen there, 15% for most companies, so for profit-making companies, and 16.2% for loss-making companies, versus the up to 33% of a few years ago, which a large number of SMEs were sort of previously used to receiving. One of the other kind of key simplifications, before we move on to some of the new rules, the restrictions regarding subsidised expenditure, so namely for R&D claimant companies in receipt of grant funding, for example, will no longer have to consider such rules on the basis they've been stripped out from the new merge scheme.
Yeah, and when we're talking about startups, the old SME credit was available pre-trading, but RDEC wasn't, and the merge scheme follows RDEC. So if you're in your pre-trading period, i.e. simplistically at least pre-revenue, you're pre-trading, you might have an R&D claim on paper, but it might not be to secure a repayable credit, because it's not available to company. The merge scheme is not available to companies in the pre-trading phase. What actually happens is you identify the R&D expenditure. It forms part of your pre-trading expenditure pot, and on the first day that trading commence, all of that R&D effectively crystallizes, and a credit, a merge scheme credit, will be claimable in the first accounting period that trading commences, subject to a 7-year restriction. So if you're going to make an RDEC claim or a merge scheme claim on all of your pre-trading expenditure that was related to R&D, you've got to have commenced trading within 7 years of incurring expenditure. So there's some complexity there. We said that it's two schemes into one, and I alluded to it earlier. It was 2, then it was 3, and we're back to 2 again. So just to deconfuse the situation, R&D intensive scheme is the second, was the third, now is the second scheme. What is R&D intensive? The R&D intensive scheme, Rob, how does it work?
So this is a sort of targeted relief which HMRC have sort of kept from a prior sort of version of the R&D intensive SME tax credit. It's aimed at kind of the most innovative companies, so namely R&D intensive companies that are speaking. So an area which HMRC deems requires kind of additional targeted support. In terms of kind of the requirements for eligibility, as noted on the screen there, must be an SME. So following the prior rules with regards to kind of headcount and financial thresholds to be an SME, and then also it must be loss making. So unlike the prior SME scheme, it requires a company to be loss making prior to making the R&D claim. In terms of the R&D intensity ratio, again, it's part of the activities to increase the eligibility and availability of this new relief. The threshold has reduced from 40% to 30%, and that reflects R&D expenditure compared with total relevant expenditure. And a further sort of complication which is worth noting at this point, that's total relevant expenditure of the company for the relevant accounting period, and also of any group companies there. So it's an area which should open up the potential to a much greater relief, namely up to 27% versus the 16%, which would otherwise be achievable by the motor scheme, but one which does require quite close consideration to ensure that intensity condition has been met.
Yeah, and then just pick up the pre-trading point. Pre-trading credit credit is available for your pre-trading. So effectively, the R&D intensive scheme is replacing the old SME scheme, really, isn't it? I mean, that's, we sort of joke about 2 to 3 and back to 2 again, but fundamentally over the last 2 or 3 years, these changes mean that we've gone from SME and RDEC to essentially R&D intensive for SMEs and RDEC for everybody else. I mean, that's fundamentally where we are. I think my observation about R&D intensity is when we look at some of the levels of information that's needed on we talked about the additional information form. There's a huge amount of extra information that's required on that form if you're going to make an R&D intensive claim, and you've got to get your kind of your numbers right, because if you're quite close to 40 and then in later accounting periods 30, if you get a bit of that wrong and you fall the wrong side of that line, i.e., you say you were 31 but you're actually 29, and then you fail the test, then you've got that big difference that you talked about between the financial benefit of the claim moving from R&D intensive into the merge scheme is going to be a pretty big number, isn't it?
A point to note at this stage also is that there is a grace period. So if you have claimed the R&D intensive credit in the prior accounting period, and you fall below it in the following, then there is that grace period that you're still able to make that claim.
Okay. All right. Let's move on. So one of the other things that came through lots of the consultation was a desire from government to limit the qualifying expenditure in an R&D claim to, in simple terms at least, expenditure incurred in the UK. And we see a number of groups where actually expenditure can be claimed in a UK R&D claim, but the expenditure actually is incurred or comes from overseas. So there's some changes here. Do you want to? I mean, this again. I mean, there's some complexity here, but just want to take us through the general principles here, Rob, about what the changes are, because it's not all costs, it's just some costs.
Yes. So namely, it's payments made to third parties, so subcontractors and externally provided workers, EPWs, both connected and unconnected. So it's a key step to ensuring that the R&D relief is still available, but it's focused on ensuring that R&D activity remains and grows within the UK. In terms of kind of potential grey areas, that there are those 3 exceptions that must be considered. Firstly, the necessary point. So that's a point which HMRC put the onus on the company to judge whether the conditions that are necessary for the R&D to be undertaken overseas exist, is whether they're on the company. Secondly, not present in the UK. So HMRC's guidance on this topic looks at a number of areas, but can be namely kind of geographical, environmental, and social conditions, or even down to kind of legal and regulatory requirements. But it doesn't go as far as extending to kind of the cost of the R&D activity and the availability of workers to carry out the activities. The final point of those exceptions there is the wholly unreasonable point, a point which is kind of considered on the facts of the case, and one which a detailed kind of analysis of the particular facts will be sort of considered by HMRC on inquiry, if that was an area for their discussion.
So I mean, we've basically got, we've got a restriction on payments to contractors, so people that we subcontract activity to, and what are called externally provided workers. This is basically staff provided by a third party, so which might be an employment agency or it might be another group company. But the restriction doesn't apply to staff costs, which is interesting, because EPWs are effectively staff. So as far as we can see, and we've looked, there possibly is a little bit of a hole in what HMRC and the Treasury have put forwards, because you've got a foreign branch, you might be okay, but if you use employees who are employed by an overseas entity within the group, then there'll be EPWs, and then they won't be included. So that seems a bit odd. But effectively, you've got this restriction on your contractors and EPWs, but you need to look at whether that restriction will apply or not. And the exceptions are, they're grey subjective tests, Rob, aren't they, which makes sometimes application difficult. And clearly this is a new area, so whilst there's a fair bit of guidance from HMRC, you're going to have to look at it, decide whether you think you fit within the exception, and then set out that approach in your R&D claim, which you attach to your tax return when you submit it, to explain why you've arrived at the decision that you have. Should we head on to the next slide and have a look at this one? So my word, this is a subject matter in its own right and could take an hour to explain. Do you want to have a go in a couple of minutes?
I'll give it a go. There's another area which HMRC have tried to simplify the rules, by redefining the definition of contracted out R&D. So it's an area which has been kind of the focus of HMRC's discussions for a number of years, and certainly it's common consideration for claimants with regards to kind of the potential kind of eligibility or sort of restriction to SME relief. In terms of the new rules, it seeks to kind of combine two previously separate but sort of linked areas of the legislation, so namely kind of around that kind of restriction on relief for subcontracted R&D applicable to SMEs, and then also kind of the qualifying expenditure for subcontracted R&D. So the new rules seek to kind of apply a single definition of what contracted out R&D is, and they're therefore allowed to be applicable both upstream and downstream in an equal manner. In terms of that basic principle there, it boils down to well, quoting HMRC's terms, a reasonable assumption that the customer intended or contemplated that R&D would be undertaken to meet the obligations of a contract. So some key points, which again, an area which will likely be scrutinised by HMRC over time, but there must be a contract in place. The R&D must be undertaken to meet the obligations of said contract, and assuming that those conditions are met, then they would be deemed contracted out R&D.
I mean, so this is all about basically one of the fundamental challenges that we've always had with R&D claims is whose R&D is it? You know, so I'm undertaking some R&D, but am I undertaking it on my own account, or is somebody else paying me to undertake that R&D for them? And there were different rules around who could claim R&D tax credits depending upon what kind of contractual relationship you had with the counterparty, if indeed there was one. So and that became quite complicated, and HMRC have got their knickers in a knot about some of this. And without getting into too much detail, essentially HMRC took a view. So sorry, the industry took a view. Certainly from 2000 up to about 2019, HMRC then seemed to take a slightly different view. A number of cases going to, or in fact probably have been heard in front of the tribunal and were waiting for decisions. And then, having heard lots of complaints from taxpayers and advisors, HMRC and the Treasury have come up with a new set of rules which operate in pretty much the same way as we thought the rules should have operated since 2000. So it's quite a confusing picture. But fundamentally, here what we've got is a need for claimant companies to understand where they are supplying a service or goods to a third party, and the R&D that they would like to claim for is part of that process of delivering those goods or services. Some thought needs to go into whether it is their R&D that they can claim for or not, and that's particularly the case where the customer is UK based or the counterparty is UK based, and that's why we need to look at the contract, albeit if your customer stroke counterparty is not a UK based business, say you're supplying something overseas, and let's say it is contracted out R&D, pure and simple, it's someone's asked you to undertake some R&D on their behalf, they own the IP. I know this is in the next slide. They own the IP, we're providing a service to them. A claim can still be made because the person who owns the IP is not within the UK tax system and can't themselves claim R&D tax credits. And fundamentally, this is all about double claiming, isn't it? It's attempting to prevent double claiming. So two companies making a claim for R&D tax credits on the same R&D project and on the same R&D expenditure, fundamentally, and that's what this is trying to deal with. Let's go and have a look at the next slide, because there's some things which HMRC say we should look at, and they look, again, without getting into a bitter and twisted conversation about the past, Rob, these look very similar to me from somewhere that I might have seen them before. I
think certainly that some of the factors on this list are familiar to some of those prior sort of indicators of contracted out R&D, it's namely quite a grey area. So whilst the contract may exist and the terms of the actual activity to be undertaken may be detailed, the actual nature of the R&D might not actually be as black and white as HMRC expect. So consideration of kind of the facts of the case, considering kind of those key factors, again, alongside the actual commercial arrangements in place, are the kind of expectations of HMRC when they're reviewing kind of a claimant's application of the new rules.
Yeah. I mean, I think for me, this is I sort of boil things down and try and make them slightly more simple in my own mind. But as I said before, this is fundamentally for me, it's about whose R&D is it? Who is the R&D principal? Am I undertaking R&D on my own behalf, and do I derive the intellectual property that comes from the R&D activity? Do I take financial risk in undertaking that R&D activity? Now, am I the entrepreneur here? Or am I providing R&D services to somebody else? So they own the IP, they ask me to do something that enhances that IP, but all I'm doing is getting paid, time and materials for what I do. I take no real financial risk in that sense. So there's two fundamentally just different types of R&D. There's R&D on my own account, and there's R&D on somebody else's. And in very simple terms, people should be claiming R&D tax credits where it's their R&D that they're working on. If they're working on somebody else's R&D, they shouldn't be claiming R&D unless that person is not in the UK, in which case a claim is permissible. So it's a complicated area, and we're not going to deal with it now, and we're horribly running over. So I think we should probably sort of leave that there. But it underlines the complexity, it underlines some of the changes, and we absolutely think that HMRC are going to look at those things, Rob, don't we, going forwards? They won't have gone to all this trouble to put this new legislation in with all the the volume compliance approach that's been developed and then not look at this stuff. We think they will look at it. Okay, I mean, I'm going to wrap up, conscious that it's 22 minutes past 1 and we've gone over by 20 minutes. There's just so much that's happened in the last 3 or 4 years in R&D, and a lot of the changes that have been discussed by government, they're now in effectively. So you're talking about accounting periods, and most of these things, accounting periods beginning on or after the 1st of April 24. So that's not just a hard cut off at April 24. It depends upon what your accounting period is as to when these rules will first commence. So you've got to be in tune with that. You need to engage with your R&D advisor. Really, you need to go through your claim. You need to look at what changes to your claim are likely to come through from all the legislative amendments that have been made in the last year or two. And that, I think, for most claims, there's going to be, there's going to be something to note that the ordinary client, the ordinary FD, won't have appreciated, that will change just the quantum of the claim. And if the claim is significant, the impact on the quantum of the claim might be pretty significant and might affect cash flow forecasts, whatever. So I think that you've got to think about those things. I think the backstory is important. I think all the stuff that we've told you about the way in which HMRC are operating the volume compliance, the way in which the ICAW and the CIOT are trying to engage with HMRC, that all talks to very, very different R&D environment, tax compliance environment, in fact, from the one that we were operating in 5 years ago, 10 years ago. And I think this is an insight into where HMRC are going, a more aggressive and more forceful tax authority, but without necessarily having the right level of qualified and experienced staff to behave like that. I think it's a dangerous combination when you've got a tax authority who wants to be aggressive, but hasn't got experienced people to do it properly and fairly. I think that's a concern. So you need to understand that, and you need to take that understanding into your, how prepared you need to be to put a claim together. You clearly need to look at your contracts and your supply chains, and you need to think about what kind of evidence you can collect to support your R&D claim. And as I mentioned before, that's not just the R&D report that you put together for HMRC to read, but it's what sits below that. So when HMRC say to you, yeah, your report says X, Y, and Z, what actual commercial documents have you got that bear that out, that prove that you did that? What emails have you got? What reports have you got? What test reports have you got? What data did you collect? What market research did you do? All of those things you might well be asked to share with HMRC, and if you don't, that's a box that you're not ticking in this very sort of straitjacket pro forma type process. It's just going to make it harder for you to get your claim across the line. And I think inevitably, we're talking about all these things. You've got additional forms to file. You've got probably more detail to disclose. You've got more data to collect. Inevitably, preparing an R&D claim is going to take more time than it used to. The chances of it being looked at have gone up by at least a factor of 20. So we 3 years ago, less than 1% of claims were looked at. Now it's 20%. So whilst that's still a small proportion of the overall total, it's a much bigger proportion than the industry was used to and taxpayers are used to. And so I think you've got to really prepare yourself for the genuine possibility that HMRC are going to take an interest in your claim. Whether you think it is good or a great claim or not is really kind of irrelevant. Once the process starts, HMRC have demonstrated they are quite blinkered about how they approach the inquiry process. And so the more that you can do that ticks off the things on their checklist, the easier it will be for you. And I think that's probably in terms of we've run over considerably. Just one more question I think has come in, and that is, do you think things will improve with a change in government? I don't know whether it's improve. It just says change with the new government. I'm hoping it will improve. I'm hoping with a growth agenda, which is what the Labour government have talked about in the general election campaign quite considerably. We're hoping that people within the newly appointed Treasury team will start looking at R&D and realise there is something wrong that needs dealing with. How high up that list it is, I don't know. Do we think that the R&D system will have more changes because of new government? I think that's likely, but I'm hoping that there are improvements to the way in which HMRC operate and the way in which HMRC assess risk. I'm hoping it's not wholesale changes, because I think we've had enough of those. And so I think probably at that point, Dave, Rob, I'd just like to thank you for spending an hour and a half of your life with me, discussing our favourite subject matter, subject matters, HMRC and R&D. And if anybody watching this or the video, if they're watching it as a recording at a later point, has got questions, then they should get in touch with their normal Francis Clark contact, or grab hold of myself, Dave, or Rob on LinkedIn. I think you can find our emails and phone numbers on the FC website as well. So any number of ways that you can get hold of us. But do get in touch, do ask questions. We'll do our absolute best to help and resolve whatever question you've got. But thank you for being patient, those of you who've stayed with us. Have a great rest of the day. and hopefully we'll speak or see you in due course. Cheers.
Cheers. Thank you. Bye.